Welcome back. You're still tuned into a halftime report on CNBC-TV18. Let's get talking to another company now. Welspun Corp is the next management on the show. It reported a strong set of Q3 numbers. Profits zoomed by 1,166% and margins have expanded on a year-on-year basis, not to mention that revenue is up almost 100% year-on-year as well. To discuss this and more, we have with us Percy Birdy, who's the CFO of Welspun Corp, joining in. Mr. Birdy, thank you very much for taking the time out. But, before we get talking about this quarter's numbers, it seems as though you're on track to exceed your FY24 guidance, which you've provided, of a top line of around 15,000 odd crores and an EBITDA of around 1,500 odd crores. On the top line in particular, how much are you probably going to exceed it by? Because you just need about 2,200 odd crores to actually get to 15,000 odd crores. So what is the exceed going to look like?
Sure. So good afternoon, and thank you very much for having us on this call. Your question on the top line guidance, yes, we are likely to exceed the guidance which we had given out for FY24. And to us, a Q4 looks like a stable quarter, and the new businesses are continuing in the ramp-up mode. So we are absolutely positive and looking at giving a better variance versus the guidance on the positive side.
All right. Point well taken. Now, the question is what happens in FY25? Why do I say that? Well, because, your order book currently is close to 7,200 crores. For you to cross the FY24 revenues in FY25, you will need more orders. And we're going into election season. So both on your India business and your US business, what is the kind of order inflow that you can guide for in the next 6 to 8 months? Say, what's the order inflow you're looking at in FY25? And in US as well, I mean, what is the demand? How are the utilizations?
Sure. So if you look at India first, India basically comprises of domestic oil and gas, then domestic water, and then exports. All the three, we are upbeat about the demand outlook and the scenario. We feel that in the export side, there is a lot more positivity, and we should be able to get a few good orders on the exports front that will strengthen the India's P&L and balance sheet for FY25. On the US side as well, there's a lot of new orders that are on the anvil, and sooner or later, these awards will also get announced. And as you know, we are the largest line pipe manufacturing company in the US. And we will get our fair share of those orders as and when they get announced.
So quantify the kind of opportunity. Could you quantify the opportunity that you're looking at in terms of order inflow? Yes, there are a couple of orders in India that you're talking about, a few orders on the anvil for the US as well. What is it that you can get as per your estimates?
So typically in a year, we execute about 600,000 tons in India. And US, though it may vary from year to year, but on an average, it's about another 350,000 tons. So both put together, we come very close to 1 million tons, India plus US. Right now, our order book stands at about 575,000 tons for India plus US put together. So in a way, that would mean we would be getting another, let's say, another at least 500,000 tons of orders in the next 2 or 3 quarters. And we are very confident of achieving that.
Okay, all right. You're expecting at least incrementally in the next 2 to 3 quarters, 500,000 tons in terms of orders is what you could expect. Demand both in India as well as the US, what is it looking like in the next 2 to 3 quarters? And the reason we're stressing on this is because we're going into an election year in India, in fact, even for the US, but in India and particularly, are you expecting that there would be a probable slowdown?
So our order book takes care of at least the next 2 quarters. So that at least gives us the near-term certainty. And we see that the path on which the government is going on the investments in infrastructure and capital expenditure, we see that all these will continue. And that's the reason for our optimism. Coming to US also, there's a lot of drilling activity that goes on in the Permian Basin. And a lot of gas which comes out along with the oil drilling that needs to be evacuated. And that's where the Gulf Coast ports are playing a big role. And there are a few new gas pipelines which are also on the drawing board as of now. and to evacuate the gas from the Permian Basin to the Gulf Coast ports. We are very optimistic that we will be able to get our share of these new pipelines.
You had earlier told us that, you are looking to ramp up your businesses. Syntex is one of them. For the first 9 months, you've done around 450 crores. So this makes an annual run rate of close to 600 crores. Earlier, I remember you were looking at a number of close to 1,000 crores as well. By when do you get to 1,000? What's the ramp up and operational performance outlook for Syntex?
Sure. So Syntex, we have acquired them just about less than a year ago. We acquired them in March 23, and it's completely a B2C type of a business and fantastic brand, as we all know. Syntex is a household brand name, uh, and a very good distribution network of hundreds and thousands of retailers and distributors all over, spread over India. So our strategy for Syntex is not really a short-term strategy looking at just 6 months or a year. We are looking at Syntex as completely transforming it over the next 5 years. And that's where we announced one project in Telangana also, that was a few months back. And now we are looking at it as a multi-locational projects that will come up in India, and also entry into the plastic pipes side of the business. So our game plan is to leverage Syntex brand, leverage the Syntex distribution network, and really scale it up multifold over the next 4 or 5 years. So that's where we are headed to.
Just a quick two-part question. We're just running short of time, so I'm just going to add this in. In terms of debt levels, where would we probably see you at by the end of, in terms of an exit run rate? How much more do you want to reduce it by? And your ABG shipyard asset, if you could just guide us on that.
Sure. So the debt has become anyway inconsequential. The debt as of December end, it stood at about 500 crore rupees. And our guidance of the EBITDA itself was 1,500 crores for the year FY24. So debt in many ways is inconsequential. We had given an earlier guidance for debt that we will get it closer to 200, 300 crores by March 24. And more or less, we are absolutely on track for that. What is happening is that now next phase of projects are also coming up, because growth is a way of life over here at Welspun. And
Right.
we are looking at DI projects, and we are looking at Syntex as well. So that will be separately handled. Otherwise, we are well on track on the things.
Right, which is what we were concerned about. Because of all these capexes that you've lined up, the debt may increase. But be that as it may, you said Syntex could grow multifold in the next 4 to 5 years. What are you looking at? 1,000, 2,000, 2,500 crores by the end of, say, 4 years, or more than that?
Definitely. So we are not only restricting to the water storage tanks market, we are getting into the plastic pipes market as well. And that's a huge market. So, and looking at the management bandwidth and the financial muscles and the business acumen that Welspun brings on the table, combined with the Syntex brand, we feel that a multifold growth in Syntex's numbers over the next 4 years is something which is very much achievable.
So at least 2,500 crores.
True.
All right, cool. Thank you so much, Percy, for joining in. 2,000 crores is what we'll take on the board. Your growth for the next couple of quarters look good, and you are hopeful of getting 500,000 tons of orders in the near future as well from both India and the US. Take a short break.